Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for Tuesday. And we're sitting here at the 25th of April, 2023, and the time just after 5 p.m. Central Time. You know what? This morning I wrote, and I said, we're watching a reversal take place in the gold-silver ratio, and it was a nasty one. And at some point, we knew there had to be profit taking on it. Where it comes from, why, I wish I could tell you. There's no way to know that. It just showed up, and silver got hit hard. The gold started holding very nicely against $2,000. Now, here's my thing. If gold's doing so well against 2,000 with the dollar up 52 points, what's going to happen when the dollar slips and inflation still stays sticky? This is a market that's destined, I think, for even higher prices. Question is going to be how to catch it, and I talk about that in my morning subscriber videos and my other parts. By the way, I haven't said this in a while. If you like these videos, can you do me a favor? The thumbs up, that would be great. If you want to join in the morning videos, there's a subscribe button on YouTube. You see that? You can accomplish the same thing on our website if you'd like as well. So, when we take a look at today, it was a down day. But after the close, we saw that the tech companies came roaring back. Microsoft, Alphabet, they're doing very, very well. And that's going to help. I'm writing in tonight's report, because I've written most of it for the evening, what's going on in the jobs market. And it's a bonanza. If you're a tech company, a startup, a small one, and you need talented people, folks, think of the word harvest. These people are being let go in droves. There'll be another wave of this yet to come, you'll see. They do that, not that the people aren't good, but a public company works for the corporate owners. They have to show results, earnings, blah, blah. So what they do at times is they cut people they don't really want to cut if they had their drithers, but they don't. And as those people get cut, you're sitting there as a small company, I'd never have this chance to hire this person or persons. Look at what's coming at me. How do I figure it out to work them in and advance my company even quicker than I thought we were going to do? That's a big part of what is going on. Now, as for the markets themselves, this is the week that you get the earnings and one of these plays in the markets. I don't care if it's the grain market. I don't care if it's the stock markets going down and then going to give you a bounce again. Why? We're getting ready for the next series of jobs report. We're getting ready for the FOMC meeting and central bankers galore lining up right after that. So as they all line up, you start saying to yourself, just where might this market go? What happens? I think this break we're getting today, Monday, is being led already by a Tuesday reversal. Whether it has legs or not, don't know, but I would think it has some. And the reason is I thought the earnings came out pretty good after the market. When we go to the gold market, has it really done any damage to it? No, you're up 0.73% for the week so far. When you look at the chart, tell me you haven't just gone sideways here. We know we have had, and I've talked about it, a pattern of lower highs and lower low. Okay, or is it a lower low? Let's take a look and get a feel for this and argue it right here. The low right here is 1982.30. What's the low prior to it, you think? So let's go to that. And here we go. 1980.90. So visually, what do you have? Visually, it looked that way to me, but it's not, and that's why I wanted to bring you in. It's higher lows, lower highs. You're doing one of these. You're bringing the market into a wedge again. And as the market comes into it, eventually it'll break out of it. So the question is, which way does the market want to break out of it? And that'll be the biggest question that we have to go. Where do you think the price battle's taking place? How often, if you've been watching me, and I hope you're a regular watcher, do I tell you the line in the sand, that 18-day average where markets go and they fight a battle to figure out trends, be it up or trends, be it down. They will fight at that 18-day average. The longer back you go, you will see patterns like this develop on a regular basis. In an uptrend, they'll come to it and kiss it all the time. In a downtrend, if that's what you have, they're coming up to kiss it. I don't know that it's a downtrend. As I said, we're not far away from the most recent highs that we've made. That's not a downtrend. This is a correction in that market. What's going to contain the market to a degree, I think, will be the upper Bollinger Band, 20, 48, 30, if the market can get there. Why? Because that's the nature of a Bollinger Band. A Bollinger Band is meant to keep the market trading within it 95% of the time. Part of the art of learning how to work with it, are the bands far apart or are they narrow? You've got to learn to work that out. Then you want to look at momentum. What is momentum doing with the market? So what we have is a market that is not in a downtrend. It's got lower highs, higher lows. It got oversold, and now it's kissing that zone. Any reading under 30 is oversold. And if we come back a little bit here, you can see you had a 29.63. That is the close on Tuesday. We're in Wednesday's trade already, and you're coming out of that to the upside. Can you get a sudden buy signal? Yes. Whoa, what do I mean by yes? Well, didn't I just say you have higher lows and lower highs? So if the market clears this high over here, you could end up with higher lows, higher highs, opening the door for that trade. Would the risk be rather substantial to buy it over that back to 1982? Yeah, it would on a full-size contract. That doesn't mean it can't happen. The gold-silver ratio. This morning, if you're a subscriber of mine, I said, watch out, this is going to correct. And where do you think I thought it was going to go? Right there. So you went from roughly 78 to 79.45, but the bigger action was this. You had lost the embedded reading. I was looking for the market to get back to the 18-day average. It has. You now have an outside day down as of Tuesday, today. Here's the trade now. If you take out the high of Tuesday, that's the outside day course. If that comes out, the odds favor you're going to go back to the Bollinger Band. As long as it doesn't, you're just stuck here, possibly down to the lower Bollinger Band. There's a flip-flop that takes place. I always pay attention to outside days. Momentum down, bias down, trend down in the market. Is the bias down? Well, the last trade is 25.27. And the 18-day average is there. So everything is pointing to the downside. In the copper market, you just had a bearish crossover possibility set up. Not there yet. The 18-day might get under the 100. Now, I don't put as much credence as I do when you're not under a, number one, influence of being oversold, number two, under a Bollinger Band. But is the market opening the door for a possible test of 376? Well, I didn't think so originally, but I can't argue that. Why not? It's just a number. It can get down there. Is there a trend play here? No, this is called a vertical price decline. The market went literally from right here, this arrow, straight on down. And it probably caught a heck of a lot of traders that weren't paying attention. And as the market kept leaking, you'd go, well, is it going to find support? We can talk about this right here. Here we go. Right here, the 100-day average. It had found it here. It had found it here. So logic would say maybe it's going to find it there as well. You're not trending. You have a lower low, higher high. You end up with the downtrend after that. There is the pattern that I'm looking at. And this was the problem. Now, I don't know what to do with that. Is that going to find the support or not? And this was Friday. Now, if it heads down, the logical conclusion is Bollinger Band could be the next target. Not there. You hit it today. If it wants to do a washout, then this number comes into play. Otherwise, a move back over the Bollinger Band is fairly likely. That's my guess. But there's nothing bullish about copper right now, and it's important when you read a chart to throw your own thoughts on it away. At the beginning of the year, one of my favorite markets, copper. It hasn't fallen apart, but it's not now. And I don't remember the last time I told my clients to buy copper. So that gives you an idea. In the platinum market, look, you just lost the embedded reading. This is an important trade because you learn a few things with this. So let me just show you how important this is. Here is the market, and it's embedded. Being embedded, I'm thinking traders are buying the market on that break to it. And if it loses the reading, you got to come out. Not only did it lose the reading, where it's no longer embedded, but it closed higher on the day. And the real last trades of the day, if you were watching, was closer to 1103 to 1104 for hours. So after the settlement at 12:30, it just spent the rest of the day in higher area. So if you were wrong, how wrong were you? From the day before, you didn't really get hurt. Even if you bought a 3-day average or a 4-day, a 5-day average of low, a 6, there's different numbers people use. They might be looking at that and saying, okay, I'm wrong, I got to come out, but I can wait till the end of the day. And I think everybody came out in one piece. But you have lost your way in this market. And no, the odds favor before it goes back up to that high, getting back to the 18-day average is a very real possibility. The palladium came unglued too. So something happened. We had the palladium and the platinum running to the upside as gold and silver paused. They went into their pause and then decline as the gold held. It's like the switching of the guard. I feel like I'm on a racetrack and you're passing a baton, and that's what the market's doing. Then the dollar. The dollar came back today with a vengeance. It had been in a downtrend, couldn't make it to the lower Bollinger Band. Still in a downtrend. Tell me the number that the market's been fighting at now for a week and a half. Even if it rallies from here, it's not going to take out anything. It can only negate the downtrend. It cannot start an uptrend. Why? Because you'd have a lower low, and if you get over the high here, a higher high. So that's not it. What I think happened is short covering took place as traders did what I think they're doing. They're just moving to the sideline now saying, okay, let's see the earnings. Let's see some other things. Let's get these government reports. We got the MBA mortgage numbers coming out. Today we had home sales, which surprisingly were better than people thought. I was blown away that they actually are up. Who would think that with these rising rates? But there you go. So you put it all together, you come up with a game plan, and that's what we try to do for you. And one of the popular things we have is our Guide to Technical Indicators, volumes 1 and 2 with these. So in these, we're talking price charts, chart patterns in it, display of everything, how to work with them, different types of moving averages, my oscillators like the slow stochastic, relative strength, spreads. I never talk spreads. I'm not a spread trader. Some people are. Elliott, Gann waves, all that through there. The Elliott principle, a lot of people love that. I'm not a fan. I find that it's like throwing a dart, and I'm never right on where the top and bottom of that is. Plus, why do I care? The only thing that I have ever found that good for, the guys that were really good at it, is giving me an idea that, hey, we're near a low in the market. But then I found that for my type of work, stochastics did a pretty good job of that too. So you have to weed things out in your trading life. Otherwise, you get signals that all collide with each other and you can't make a decision. You have to decide what's right, but you can't make it till you learn about them. That's the right way to do it. So to get this, and it's free, just go to our website under free offers. Move your cursor up here. You'll see an icon at the top. It's free offers there as well. And you can always call my staff. They'll work with you. I'm Ira Epstein. You have a great day. I'll see you next in the financial market update, I hope. Take care.